Hey everybody, welcome to July 17th, 2025 Principal Profit Trader Coaching Call. We're going to take a look at what we talked about in the market. Well, I made a daily call last night after forget what time around before I think it was like late afternoon before this candle formed. And I basically said, expect more sideways action tomorrow, right? Because we had this up phase and then we had this selling tail, but we also have this bullish bias. There was an automatic long here at this micro bull bear, and then now we just might be going sideways after that because those are the two energies that are colliding. That was the call. So if we go on the smaller time frames, the first good setup on the long side was around here. That's when I was kind of warning everybody, hey, maybe not the low of the day, but into this zone. Now it didn't really get as far as I want. I wanted to move. I had a resting order here, so I didn't jump in. I thought about it. It was at the top. It would have been fine if you did, but then you missed this. I can't buy when it was up here, although I was kind of pissed that I missed it. So I just had to wait. So I just posted that chart. And then it came back down here and kind of formed like a double bottom on the 15, like here or something. It was like one of these two candles. And then I got in here. Okay. So now then I had a runner in here when it broke. Part of me was like, I'm going to short this too because it's a sideways call. But at this point in time, I get up very early. I just couldn't concentrate. And I wasn't in front of the screen at this moment in time. So because in my mind I said, okay, well, I reduced risk here, but I thought we could break this. This wasn't good enough for me to short this because we had an intraday V, but this was good enough up here for me to short this. I had a zone originally between this high and this swing high, and then I just broke them up into two zones. This would have been a great short. But I didn't take the short, but I'm all out of the long. It's hard to really concentrate and perform at this level that entire time. At 9:30 to around 3 o'clock. I just couldn't be in front of the screen, but that's when it happened. And then I came back and this started to turn. I said, okay, well, if I would be shorting this, I'm all out of my long. This right here is a zone that we're kind of, sometimes it holds and then we go around it. So I'm not, it wasn't as strong as these two zones, right? And keep in mind, this was almost like a sideways channel. And then we had this false breakout here. So anytime you have like a false breakout out of a sideways channel, when you go up into like the previous leg of that, that's usually a pretty good short. That was a good short last night, right? This was also a signal I gave here. I mean, this was at that micro bull bear. So you can see just having the patience to trade a sideways phase is really about good trade location. If you can solidify good trade location, you can create an edge because this is absolute uncertainty. We don't know anything. Okay, that's why I like that quant trader from the Ivy Leagues that I post on the channel. I also have friends that are from the Ivy Leagues that are those kinds of traders that I met at my reunion. And actually, I just texted one today. They wanted to know things about crypto, but we know a lot of things about a principal profit trader that these big hedge funds at Wall Street would be liking to know as well. So the little guy can compete, in other words. So it's all about really planning the trade and trading the plan out, right? Knowing that I'm going to buy at initial resistance with this double bottom, right? And then to say, okay, when can I start selling again? Right. Well, this would be an area to reduce risk, but the way that we got there is bullish. So I took off 75% and kept a runner in for this break. This would have been an area we could short, right? Because this would be considered initial resistance because it's the first area where we had a big move out of it, right? Yesterday's low and the current day's high, the current day's low and the current day's high on retests are the weakest areas. And sometimes they make sense if there's confluence. Like, this double bottom was that day's low retest, but there was multiple touches and we had a huge move off this zone, right? So that is a micro bull bear. A micro bull bear is like a zone that's like a week or so to less, like 3 days. A bull bear zone is like, could be like 2 to 3 weeks, and a major zone is like a month or longer. And those things just need to be faded no matter what, pretty much. I mean, you could have everything against you. And that still needed, it was very difficult to do. I kept telling myself that, oh, the system says everything is against me here. In a sense, as I'm buying here, we just, the bears are in control on the day. The intraday bias is very bearish. On top of it, we had this false breakout pattern, and then we trended down, and then we trended down again with these really strong candlestick bars. Now we know that the biggest candlestick bar sometimes could be in the right context, could be the sign of exhaustion. But at the same time, right, at that moment in time, the sustained momentum is bearish. There's like a launching point of directional conviction against me. So the intraday bias and the sustained momentum are against me in the context of a bearish yesterday's candlestick pattern. At the same time, I was seeing all those bearish rates. I said to myself, I have to buy here because my system says, unless we're just starting out in front of a trend, right? I have to take every single micro bull bear, or major zone on first test. That's what if you want to fade a key reference area. Because on top of the fact that, yes, we had yesterday was a reversal day, and then we had like a down day, right? Even though this could have broke, there was a clear invalidation point. And if I'm right on that, you got to think in terms of your risk reward profile. Your risk reward profile is going to be really nice on that. I mean, I made a mistake and I got out too early on that just due to emotional stress because I took the first one here, and that was like almost a percent move, believe it or not, that little move there, right? And then it reversed, and I'm like, oh, usually if it starts to add this is like a V pattern. We don't fade V's, so I'm not going to fade the inverse V on the short side, right? So then there's this overshoot, but then you're at this bull bear zone from this line to this line. That's the bull bear. That's when you should take it with a stop no matter what. It was also later in the day, right? So the timing was okay. This was at 10:45. So it's not like it was like 9:30 in the morning. We were going sideways, and then this candlestick started with a downtrend. It was like we went all the way up here and then came smack down into it. So there was some contextual reasons why it wasn't, but at the same time, flat out rules, sometimes they work out, sometimes they don't. But if they work out, you get a huge reward to risk profile, right? And we got a nice move off that. Okay. If you didn't get this, and this was at, you're on East Coast time, you're probably asleep around here, and you wake up and you just trade the morning session, which started around what, 9:30? Like here, it starts around 9, let's say you're doing your pre-market work here. I mean, this was tough to trade because you're not near the low of the day, right? That was the dilemma yesterday. So, but given that the bias was up and other markets are up, I almost gave this as a signal, or almost took this as this pushed in here. I don't really like to fade in the middle of the zone, but there was enough bias reasons. But I said, no, I'm going to stick to my guns and not take that. Remember, if you are taking it, this is essentially, a day. It's not like a trending day, but it's certainly a day where we, went sideways and then broke that range, and then the we closed here, so the bulls ended up in control. So it's sort of like a normal variation day to the upside, not like a pure trend day, right? You see how we kind of, and if that's the case, right? That's why I'm not always thinking, oh, I have to, like some of these obvious areas where people are shorting. You have to say to yourself, for this short to work, why didn't I give a signal to short here? I definitely reduced risk, but I'm not going to short that. It's because those pure sideways days, you got to think in terms of day type, right? The pure sideways day happens to be 5 to 10% of the time, right? It's more like these sideways days that kind of expand that first hour range. You know, this is then, this is more of a down day and then it kind of went sideways. So, I mean, none of these days are perfect. This day was a weird island pattern reversal. At this point in time, this shouldn't have been a trade. That was a mistake in trading on that day. That was me just super bullish about what the market's been doing. But remember, it's like once we broke out of that huge major resistance zone, then the time frames become aligned again. Because before that, my bias is quite neutral. Before we broke. right? So it's like every time this came up here, we really got reversed. But as this came up here this time, we don't really know. And there was this V recovery, there was this reversal, and there was this lack of a reaction here. Like this time, we got these strong conviction bearish engulfings. This time, we just kind of went sideways, and that's trends start from balances. That's why this had good odds to break out this time, right? Even though I said the time seconds for September, there's a lot of other things on the weekly that said this would break out. Now, as this is breaking out, especially after this candle, you should be thinking longs only no matter what. Really, that's sort of been the play, right? Now with Ethereum here, now keep in mind I'm trading the day trades on size with only this market. That's why I have these very specific key reference areas. Now I invest in Ethereum, so you're going to see mostly a daily, not me day trading this one as much. This is because I don't like to hold it on the exchanges after Bybit was hacked. The Ethereum wallets were hacked on Bybit, but anyway, right? We had this context the last couple of days. I said this had great odds to break out, and it did. Once we came up here and closed and built market structure above this key swing high, we have time. We're essentially building structure above a key resistance zone that creates time frame alignment, right? And we can even use, and once we did that, we're gonna, like a magnet, go to this next zone. And even though we broke this key swing, we have to honor this swing, and that move, because that's kind of where it started from, right? These are really, problem areas, and you can see we're not easily breaking through this. Right? So that's why as well today with Ethereum, now we back off a little. As this came up here on first test, you actually could be thinking, okay, major resistance. If you were actually trading this based on the system, that was an automatic short, as well as a place to reduce risk if you're swing trading. We'll just take a look at that price action. Yeah, it's been very strong. Now, if you're not anticipating this and you see the breakout, there's a couple different ways you can trade it if you were trading it. So as this was breaking out and it had the momentum, the relative volume, the other markets on its side, and you're not in this trade, if you were trading Ethereum, these fib ratios work very well. The key is, you just don't want to buy at any high, any extreme, no matter how bullish everything is. Like this just broke this multi-week balance on conviction. It doesn't mean, the trade location can be so bad that you can't take it. So let's go to the 15. It opens here at 9:30, right? Breaks out. That's when you do have momentum. A lot of people misuse the momentum idea, right? There has to be a recency to it. So let's just say you see this candle and you're like, oh, wow, this broke out on conviction, right? There's a couple things you can do. In isolation, I can't just say buy this pattern. It has to be everything that Ethereum was doing from the top down conviction. It was coming out of this multi-day, 3-4 day balance after breaking all this with a bullish larger time frame bias, right? So because of that, that's why we could take a shot at it, right? Now you could just buy the breakout. I know that's tough for a lot of people. Now, if this was later in the day, you couldn't do this because this is earlier in the day, right? This is around 9:30. Then you could take a contextually aligned balanced breakout setup. What I like to do is just feel it out, right? When it gets to the next, every time it gets to a candle, right? Draw your fib ratio. Wait for to get to 0.382 or 0.5 or 0.618, right? 0.382 is the first one you should take. Now it didn't on this candle. That's okay. Extend it again. Right? Should I buy this first one little one here? Well, it's not even at 0.236, which is really aggressive. So no. Right? Wait for 0.382. Right? And then this was at 11:45 a.m. You're thinking, yeah, it is at 0.382. You know, if I'm right there, there's enough time left in the day, right, for us to get a really good move in the afternoon. Right? The other markets are already up. We just broke. You got to think like once you just break a balance and it's early enough in the day, you know, that's a bigger picture balance breakout. So that's why you would have an extra edge there for the trend, as well as the intraday momentum, pace, and character price all confirming it. But top down, you already saw that it broke that balance because the larger time frame is bullish anyway. So then you would have taken it here. I was seeing this in real time. It's just that I'm after it was hacked, I can't take it on Bybit, but this was such a nice setup. I was almost going to mention it yesterday just for a fib ratio example. I think I did post this chart though with the fib showing that it went to 0.382. And then you get a huge move. I mean, this don't underestimate. This is a great R potential because you're the way you would do this structure mechanically is you'd have your entry around this first fib ratio and your stop at the next one. That's a very tight stop. If you get stopped out, then you would take it again. And if you still have conviction, you would even take it again here. Right. But at the same time, if you're right and you have enough top down convictions, the first one will usually hold at 0.382. Now, what people do, what they'll go wrong is by the end of the day, they'll draw the fib ratio. And then as they're going into the next day, they'll say, see, that's at 0.382. Well, technically, no, it's not. Don't use that stat at that point because there's no momentum. This is done. It's a trend day. Now the momentum's dead. What you did by buying here, if you decided to buy there, is the next rule that I have, where after a pure trend day, if the conviction's still there, you didn't just hit some major resistance zone, right? You know, where's the last major leg up, right? Well, this was around, 4,500 hours. So it's 145. You know, this candle and this candle really is the last kind of leg up, right, for the bulls. And then it went sideways, right? So you take the trade at the last. I always say this in the channel. You take it at the last, and this goes for the short side as well, too. So basically, you're really just fading market structure, not a stat there. I just want to let you know to use that fib ratio, to use a pullback continuation setup, you really need to have momentum on your side. And, this you definitely did. This was like, from this candlestick here to this momentum breakout is 15, like, less than an hour. That's great. Going into the next day, I mean, it's done, right? And you can see, like, after we have a trend day, we're not getting trending action. This is almost a pure sideways day right now at this point, because that's what you would expect. Technically, after a pure trend day, you would get a sideways day. Now, this is all like smaller time frame stuff. What's going on a larger time frames? Are we, because even as day traders, we want to be aligned with the larger time frames. We got this balanced breakout pattern, but we really want to see how this week closes. We don't want any type of candle where we kind of would get sort of this is almost an indecision cancel as it is. Like if it closed right here, it'd be 50-50. If it closed with a selling tail below this by the end of the week, then you have to say, okay, we might have a couple of weeks where we go sideways to sideways down now, right? But that would be more of a shorter intermediate term inflection point. This should be the big, if we're going to use this in the past, these bigger moves have really worked well off. See, this was at resistance, but it inflected to a bigger move, and then the trend happened. It's worked very well. So I'm just going to keep an eye on that chart. I know we talk about this one a lot, but at the same time, we don't want to get like a blue car syndrome with confirmation bias, because as I'm seeing this time cycle chart, I'm saying, well, in the event that it doesn't work out, where we use it as an entry point, which I was hoping we were going to break out before then, We have also, bigger picture patterns. We have this inverse head and shoulders that we add into the system. And then we also have another thing besides bigger picture patterns. We have candlestick patterns. We talked about how this is a tight doji that kind of closed even above the center line. And that's showing that we're going sideways near an area where we got quick downside reaction previously. But this time the behavior is such that it is not doing that. That's another sign, in addition to all this bigger picture inverse head and shoulder, that we're going to break out, not reverse down. And that's what happened. Whereas this selling tail candle indicated we were going to go down again. Also, with this is just a pure double top. Whereas this isn't, really, I mean, yeah, I'm considering this major resistance, but I'm not considering the candlestick pattern a double top. I'm considering an inverse head and shoulder. So you see how it's a contextual pattern. So it's like you got to make everything aligns differently when everything, like a kaleidoscope, changes with it. And certain things are more magnified than at other times because they stand out more on the chart at the moment that we're going to use it. Like, for example, I don't use the CCI that much, but one of the hints that we were possibly going to break out was in the context of this inverse head and shoulder and successfully getting this in double bottom inflection point rotation up, right? We also, and I don't use it that much, had a really, really exaggerated. See, if it's exaggerated, that's important visually on the chart. The momentum oscillator reversal, zero line reject, the yellow line isn't even near the purple, but we had this huge turbo overshoot that hit the minus 200. That was like the zero line reject of all times, right? That we were super going to get at least a reaction up here to the highs, and we got a big move off it. Now notice on the upside, we're not getting an inverse zero line reject. You see the CCI is following the turbo. What I'm worried about is overextension, where if it got maybe up above this or at the 200, or it's spending time up there, that's when it's getting overbought. But we're not quite there yet. We're getting there, but we're not. And it's not at risk for that inverse zero line reject because whereas this didn't penetrate, this did. So we're okay there. So I just as a CCI checkpoint, we're pretty healthy. Now, there's a couple of bullish indicators that I wanted to talk about as I was thinking about the timing. Now, I always talk about how for Ethereum, for us to have the shitcoin season, the alt season, we want Ethereum to start more so than not outperforming Bitcoin on an intraday basis. You see, yesterday it was on fire. Bitcoin, did not perform like Ethereum. Weak sideways day. Ethereum, huge day. 8%, closed at 7.5% on the day. Great. That's what we want to see that more often. You can see, well, this is more of a sideways day for alts. The ones that are doing well, like you're starting to see some of these smaller caps like Curve start to take off. Now, let's get back to the altcoin market cap. Okay. Somehow this got a little. Yeah, I mean, I'm just going to go back to this crypto total market cap. Every time we broke the 200, we basically had a couple of bounces and then basically broke this death cross, right? The golden cross has been the fastest above the slow. This is one now the slow's above the fast. Anytime we invalidated the death cross, right? Everyone say, oh, death cross, it's going to go down. Well, let's look at it from a beauty principle perspective and see how price behave there. Multiple bounces, invalidating the death cross, bearish thesis, huge bull run. And this was the last sort of bull run that we had leading up from last Christmas tree rally from November up through December, right? It very much started to get to about 1.64 trillion, nowhere near, just to show you what it could be. I mean, just last November 2021, last one when I saw huge moves, 10x's, everything was going nuts. The market cap was similar. So something's going on here where it's like it's growing systematically with Bitcoin, but the ratio between what is in Bitcoin and altcoins isn't there enough to pump this yet. But what I wanted to say is that every time it did break this, we had a huge run. And I said this even right before this broke out quite a bit, actually. I was talking about this. And we got it now. So this is a really good sign for alts that we got this directional conviction out of this. We have the DeFi market, just looking at that, very similar, invalidating that death cross. Yeah, I think this chart is where I talk about it a little bit more, where there was this death cross. Once we bounced and invalidated it, we had a bull market. Bounce here, invalidating the death cross. And yeah, just we've had a big move since. We'll see it continue on. We really haven't, like I said, Ethereum has to outperform Bitcoin for a while, and then that has to be the norm, and then we have the alt or shitcoin season, and this chart sort of is confirming that scenario. Don't look at this chart. This chart rugged. You're getting a new CEO, but this is just an example of firm-specific risk. This is one of the only coins that's ever rugged on me, but it can happen. Small market cap Dutch project. At times you're just thinking, man, I should just go with Bitcoin only. But then when alt season happens, you're like, well, Bitcoin didn't move 10x. So I mean, I think if you really wanted to go big, if you wanted to position trade on size, something that I think, or even invest on size in an altcoin because you're greedy and you're like, I want a safe, greedy altcoin. I think Bitcoin maybe could double from here at best in the next year or so. Maybe, but I want maybe like a 6 to 10x. Bitcoin's not going to get a 6 to 10x, but SWE will. I think SWE should, and I don't want to say will. Anytime I catch myself talking in absolutes, I got to correct myself. But I think SWE has some pretty big backers on it, some pretty big investment firms have been talking about it publicly on Twitter recently. I'll post some articles. In fact, I might pull one up here. Let me just move these over here. So I'll just, if you guys can hear me, you guys can see this new chart screen? Okay, good. So it says alt season can be amazing or devastating. First, the tide doesn't lift all boats. To asset allocation is crucial. So basically, I don't think that, all coins are going to rise just because there's going to be an alt season. Second, remember, it usually happens in rolling pumps on different tokens. FOMO at these times will kill. Conviction plays. What is conviction? Your token must outperform Sol, Ethereum, and Bitcoin to even matter, and it needs to have weekly charts that prove that. For me, SWE has a good chance and has outperformed this far. Your mileage may vary. Time horizon matters too. You will destroy your capital if you flip around too much. You are near zero short term. So what I wanted to talk about with this one and now into this one is that SWE is getting this attention. This was posted today, and this guy's not even a guy who gets a lot of. Let's see here. This is a SWE network. Let's see what they're seeing. SWE network just plugged into 20 plus chains. This guy actually is pretty popular, Rao Powell. Yeah, so he posted this yesterday, and it's already gotten almost 500,000 views. So, yeah, I mean, these are the type of, these are the type of influencers that get a coin going during alt season. And it's not just him. Let's see. We don't have to play this, but basically, Swee's now live on Near Protocol, just plugged into 20 plus chains and 80 plus assets in one shot. This is the moment Web3 starts to feel like magic. No gas juggling, no hoping through 5 wallets to make it work. So yeah, you can see Sui seems to be a great altcoin for this cycle's narrative. It's really outperformed the other alts, and I like this guy's take on the fact that it has to outperform Bitcoin, Ethereum, and Sol. Yeah, he basically says, I won't get the best performing token either, but directionality and risk adjusted, I tried my best. Yeah, that's the term I was looking for. This is to me the best risk adjusted crypto you could get into in terms of would be Sui. My bag is mainly Sui with Ethereum via NFTs and a smattering of others. Ripple, Doge, what is SCF? I forget. Bitcoin and Sol. So yeah, this guy makes a post and gets 500,000 views. That's some good advertisement. So I might even repost this on my channel. So let's take a look at Sui. Yeah, now breaking this trend line, this would have been a great, cup and handle, bigger picture pattern here, breaking the trend line right here. Also, if you had the conviction after this buying tail, noticing that this is a key reference area, this launching point of directional conviction, that would have been a good place to reload, stop below that or whatever. Just remember, if you're trading this, it's very difficult to trade this because you will, just through volatility alone, violate that 1.2 to 1.5% risk margin unless you get super good trade location. So I don't trade that. I just invest in it or, position, trade, hold it, whatever you want to call it. But active day trading and swing trading right now, I'm focused mostly on Bitcoin. I even stopped with the ES for a bit. But yeah, I would say if you guys don't have your bags, the SWE, get some SWE. SWE seems to be it's got the seems to be the favorite of a lot of influencers. And unfortunately, I hate to even talk like that, but this is a narrative driven market. And the right narrative in the right market can make a fortune. Seriously, literally can make a fortune. I've seen it happen. Experienced it myself, but in between, lots of learning, lots of headaches, lots of work, because this is an unpredictable environment. Right? I mean, why is Curve outperforming everything, but these other ones, I don't know. This was a signal that I gave. You check it in the channel. So it was last November. I said there was right here, there was a zero line reject and a V pattern, I said, and then bam. That was pretty good on the money. And I think we took off 75%. And, if you want to keep the runner or start to consider taking it off, even soon, even now, if you're concerned, if you're trading this. I'm investing in it, so I'm going to keep holding it for a bit. But yeah, I mean, there's no right. I don't know. I don't follow any reason why Curve is doing better than, let's say, Engine, but one's a gaming coin and one's an exchange coin. So it could be something macro related to their firm specific related to that. I mean, I just remember this coin last bull run made one of the most impressive runs, $56. And you just have to ask yourself where's that hype again? I mean, look where we really are. It's just there. You got to ask yourself: are some of these projects dead? Should you liquidate? It's always tempting to swap this out. Do I liquidate my DOT and throw it into SWE, even though my dot position might be below break even or something like that. You have to ask yourself that. Because if you start swapping and moving too many things, you lose that like little bit of diversification element. And I'm not saying if you don't pick the right one. I mean, if you pick the right one and leverage into it, yeah, but it's just like that. The right one is the thing. I'm keeping this one around because I stake it. I get good staking rewards. I get like a couple dot a day now. And there's always this talk about, Polkadot might get this TikTok deal. And it's one of the creators of Ethereum is the father child code writer of this. Is it Gavin Wood, I believe? So, I mean, there is something to it. I said, wow, 56, no one even knew about it. Can we get there? I don't even want to get to 56. Let's just go to 40. 40 wouldn't be bad. It's a 10x or something. So, but yeah, this isn't one of the new coins that I picked. I'm not as bullish on this anymore at all compared to what it was. It's like, I hate to have to rely on a TikTok deal. I think the ones that are going to, like I said, I mentioned Sweet, but let's talk about some of the other ones that I think will do well in addition to Sweet. I think Injective will do well and Say, right, which has been, you know, ever since this pullback continuation pattern, been creeping up nicely. So Say, Injective, and Sui, I would say. Ripple doing well too. You can just see like once we cloned this balance and moved almost about 100% of the range, then when we got near the bottom of it, that's when we could reload into it. This is a good spot to. I don't really follow this coin. I don't own it, but this was a good place to reload on June, right near these range lows. And we have this other. We don't talk about this pattern as much, but this is that rounded bottom pattern. And I mentioned it when it was like right here, right at the edge of the round here, and then we had a huge move. It'd be nice if we can get a breakout, but as we're coming up into this, we have to realize this is a key reference area. You should take profits, but at the same time, if your conviction is a little higher, stay through this pattern because this thing might just resolve itself and come back down here, and then we might break out. Right. So this was a great run, and it's possible we can get there again. We do these AI plays. Yeah, Tau could do very well as well. This is an AI play. It will be involved in a lot of Web3 development. Yeah, I'm less bullish on this coin. Remember, this coin got to $4 when we exited. Made a hell of a run, even higher actually, 5. We got out around 4, but has not really seen the same kick here. I'll open up the floor now. I know we had a few folks in here. A couple of them took off, but if you guys have any questions about trading or coins from your portfolio you want to take a look at, the floor is yours.
Well, I had a question. Maybe you can put some put some words to it for me. I'm starting to think that maybe my approach has been, oh, I don't know. It seems like I'm spreading my capital too thin among too many coins. And maybe if I just stuck with like one or two, I've heard you say before on these calls, like primarily you do Bitcoin and Ethereum. So I'm starting to think maybe that's just the way to go. Like maybe find a couple coins that I can really understand the history of and know their nuances. Because being spread out, I've got 20 open trades right now. I'm really starting to think it's probably better just to
You said
put
you're in 20 different trades right now with like 20 different coins that you're different coins.
right
Are you also trading the S&P 500 too, or just crypto coins now?
straight crypto.
Yeah. So, I mean, I also have a pretty, broad portfolio as well from all these altcoins as well, because there's a lot of more beta in them. But yeah, I mean, if I could go back in time, maybe I would have leveraged more into Bitcoin and Ethereum. But that's in hindsight now. There is this alt season coming up. But if you were thinking about reallocating or you have some money that you wanted to invest in this, I think people sometimes get caught up in like, oh, I need to diversify. Well, if you're diversifying within the same, sector of the asset class, are you really diversifying that much? You're only diversifying out like that firm specific risk. But really, it's almost like throwing paint on the wall. If I had like 100K, like I was going to throw at altcoins, I wouldn't want to put it in like, let me get that 100K and put it in 10 different projects. What I would want to do is I take that 100K and I would just invest it in Sweet because people, yeah, there's diversification, but there's also leverage in the right project. Like if you're leveraged in Bitcoin, you're not even really worried too much about Sweet. If you're, if you are, we would reallocate. So what we want is with these OGs that have like huge amounts of Bitcoin to then just take a little bit of their winnings and then go into the alts and then go push these small market caps. And then what happens is that's what attracts retail. Retail created an insane bull run. So, don't discount when retail FOMO kicks in. Um, they can go a little crazy for sure. So, yeah, if I would say like at this point in time, if an investor came to me and says I have some Bitcoin, I have Ethereum, I have the gold, silver, all that whatever stocks, and they're like I have 100K and I want to put it into altcoins. Yeah, I mean I wouldn't say 20 now. The old me basically, yeah, let's diversify. I was into this, I was into that. But the management of these is not easy for most folks. I would say the average person would have a difficult time figuring out how to stake and store Polkadot on their Ledger Nano X, right? And
Right.
it's like, they, so as I'm doing that, I'm thinking, man, like who, even with Sui, I'm thinking who, like in terms of retail, who's going to buy this? Like, what is this? What is this? Bitcoin, people know what this is. It's in the vernacular. So there is that, like, sometimes I'm like, is there enough energy and excitement? Like a lot of people are just getting by, paycheck to paycheck. There isn't that, at least I don't feel it yet, that crazy greed when everyone was, 2020 when it felt a little different. So, but yeah, I do think history will repeat itself. Um, the prices are so low now that we wouldn't even like for us to even experience an altcoin season because I think the altcoin investors are so beat up because everything's allegedly so delayed or whatever. But I think I think that people would be happy if in some of these old projects, if people just got maybe like 50 to even 70, 70 to even 40% of their all-time highs. So what I'm saying is like what we could consider an alt season doesn't even have to be something where it breaks what it did last time for us to make a lot of money or, because these levels are so nice, is what I'm trying to say. So at the very least, if you did invest in some of these projects right now, you're getting fantastic prices and you're getting this time cycle that's on your side. There's this interesting summer time cycle inflection point that broke early, right? Whereas if we were just doing this right after such and such, you could be sitting through something a lot longer. So you also have that benefit as well. I'll give you an example of what I had to do on a Saturday night with my tech advisor that the average person couldn't. I bought into this coin last bull run because this is so stupid. Mr. Wonderful from Shark Tank was promoting it, and he's like this famous guy, and crypto was so new. It felt like it was so new, and if even at the leading up to this bull run, last bull run, 4, 5, 6 years ago, even Trump was negative on it. So it's like all the administrations were negative. They called it a scam. Now it's like he's inviting people to the White House, and there's all these favorable bills. This guy is such a shyster, but this just goes to show you this coin was called Matic last bull run. It switched over, it had to switch networks, and I had to do some work. It was a little tricky. I'm thinking a boomer who just wants to click a button and buy Bitcoin on Coinbase. That's hard enough. They have to sign up on a website. I can't just make a phone call. Who, you know? And this used to be Matic, and I had to do this conversion. And the thing is, if you convert, you had to make sure that you were converting it through the right pathway. Because it's a layer two, but it also has its own network. So I had to figure out whether I bought this Matic coin on a Matic network or whether I bought it on an Ethereum network because it would screw it up. I'm thinking this is just too weird for people. So like I'm not excited about it. I don't even talk about Pool other than hey, if anyone else has any, I can help you convert it. I'm just giving an example of what a pain in the ass this is on some of the stuff. But the reason why I like the smaller caps in the Swede is because we don't even need retail, and retail seems to even like this one. But we don't even need retail to pump it because it's going to have so much institutions, venture capital getting, which I don't see them getting involved in Theta. I had a lot of Theta last run. I really believed in Mitch Liu and this decentralized video streaming premise that Theta Network was behind, and because Braun the whole thesis behind that was that it was so expensive bandwidth that they were going to decentralize it and make tons of money. Well, guess what happened? Bandwidth got cheap. I forget why it did, but so they had to pivot. So their company now is doing AI chat boxes. It's like, man, I got $275,000 in this shit. What the hell? Uh, Granted, it's got major league teams, but it's like, this one didn't get invited to the White House. Swede, the Solanas, Ripples, these ones are the ones that institutions are getting involved in. And yeah, I think this one is definitely out of my new bags this year. It's my favorite and largest one. And you get the right bag, it can make up for all your other mistakes. I mean, let's say it gets to 20 or $30 in the next year. We're already in this giant balance, right? Once we break this, we'll at least move 100% of it. So we're talking. That's nothing, you know? There's people saying 20, 30. So structurally, yeah, I like a lot of this, a lot of opportunities. I just think there's so much product saturation that even though, like I showed you, the market caps are similar but last bull run versus this bull run, it's not even close. So it's like, is there's just so many projects now that it's so diluted that they're not getting a pump? Possibly. Most of it is in Bitcoin. Let's check out the Bitcoin DOM real quick.
I get what you're saying, but now you're talking about like a longer time frame. So I guess the problem I've got, looking at the short term, like days to week to maybe 2 weeks, um, and this is the closed trades that I'm looking back on the data for. It certainly feels, and the numbers are telling me like, hey, I can put 3 or 4 grand in Mina, and when it's 19 cents and it goes up to 28 or 29 cents, and there's a lot more profit involved than putting that same amount of capital like in Ethereum or Bitcoin, where you might make 50 or 60 bucks on that same amount of capital if it goes up. Um, so I guess I'm looking at leverage and time cycle, and it just seems like I'm getting to the point now where maybe it just seems like easier to divest of all the coins I'm in and just do like one or two bets at a time with more capital.
Well, I was going to ask, so is your time frame primarily like, are you swing trading? Like you're stepping out of time frame, holding longer, maybe trading 4 or 5 times a month? Or are you doing that plus day trading where you might trade, once or twice a day or both? Or maybe are you investing as well? Basically, I try to trade on multiple time frames for different reasons, but um, I was just wondering what you were doing.
Well, I do have some long-term trades that I got into without the analysis beforehand, and it's turned me into a long-term trader on those particular trades. For example, mentioned XRP. The last time it was around $3, and again, I had made a few trades before that, and thinking, great, XRP it's gonna keep going up to 4 or 5. But it didn't happen. So the last few trades of XRP, I got in like at 325 and 326. And I can just look the dates on those. That was back in January 16 and 17. So it's great now that it's going up. It's at 335 is what I'm tracking. So it would be a good time to step out. But now we're talking, it's been a 6 month cycle. And those trades, let's see, it was about 6 grand in capital. That capital was kind of held up for 6 months just to make 260 in profit. So to me, I'm looking at, maybe I just need to be more concentrated and really focus on, if I'm going to make a trade, back it up with the capital so that when there is even a slight increase, the capital works for me, and bam, there's some more profit that I can turn back into capital.
Well, and I'm in this sometimes dilemma too. If I'm ever in a situation where some of the information is saying it'll go higher, but then there's also some other information that's like, hey, we're at a pretty strong resistance zone. Maybe we shouldn't push it. I will just take a quad exit because I'm like, I wish I could know the future. This would be so much easier. I go to the beach right now.
Right.
But at that point in time, I know there's really no perfect answer because this isn't a game of perfect. I know that if it goes up and I take half off, I don't make as much money. And there's a little bit of like, I should have just held to that target. But I also know that there's many times where if I get greedy and I just hold indefinitely, I can go below break even and lose it all. So if I don't have a strong conviction, I just I use the quad exit.
Yeah.
And it's not always a black and white thing. There's times where it's like people say to me, it's like, well, is your half point in the quad exit the high of the day, or is it the middle of the range for VWAP? That's like really there's no right answer. It depends on the context. If we have a lot of volume in the market, like we did yesterday, or rather 2 days ago, and we're coming off a strong zone, then it kind of makes sense to keep holding it. But if it's low volume and it's choppy, then it's like you want to get in and get out. And it's just like that. I just keep reminding myself of that book. Golf is not a game of perfect, and golf is not a game of perfect because the best golfers really just would have better mental and emotional state control. So the trick of there's I can't tell you how many times where it's like, oh, I miss a trade, and then that feeling of anger, I just missed a trade. Oh, I can't watch this. I need to get out of here. Whereas if I just went into an optimal state of mind, said that's okay. I'm going to scan for the next thing. Don't chase. I can't tell you how many times it would work out in my favor where I would have another opportunity to get in. Like today, for instance, I missed it when it could have bounced up really nicely as soon as it touched my zone. But instead of chasing it, I just waited for a 15-minute double bottom in front of it. If it didn't happen, it didn't happen. I was willing to let it go. There might have been a time where I was like, oh, I missed it. I got to get up and leave. And this has happened a lot, right? I'm like, oh, I missed it. I can't watch this. There won't be another opportunity. And then I miss it. It's like the same thing too. It's like I'll miss a long side. And then it's like, if I was just focused, I realized there was a great opportunity coming up later in the afternoon on the short side. There's always an opportunity. Like basically the day trading is scanning for the possibility of an optimal state of mind while knowing that an optimal state of mind doesn't mean I have to press the button. Like it's basically coming into the day with the performance energy. That's why it's like not just like a random thing that you can maintain the discipline to maintain an optimal state of mind no matter what, which is a skill because you're not going to always feel optimal. Optimal state of mind, what I mean by that is even though whatever I'm feeling, I'm aware of what I'm feeling. And if I'm in a situation where what I'm feeling is going to affect my thoughts or feelings and break my rules, I have to get up and leave. I can't trade it. But it's also having the discipline to know that when you do make a mistake and that's inevitable, that you have to recover quickly because that's what great traders do. So, yeah, I mean, that's what I like now. But the thing is that even some of these great training coaches, like this psychology isn't for everybody. It's hard for people to maybe take a loss and then be okay with that and say, okay, well, where's the next positive expectancy trade that day? I can take it again because you're emotionally shot at it. I mean, I could have shorted at that was the initial resistance, but it was exhausting holding on full size, even going up through that break. I didn't know if it was going to break or not, but I wanted to capture enough profits where if you come back down on size, you're not going to get you're not going to lose a lot in fees. Now, at the same time, it went up a little bit more, and then I took a quick power nap, and then as it was coming back down on resistance, it's like, oh, that's when I was in my mind going to either get out of that or short it, and I kind of missed both. At the same time, as I'm getting out of the runner, I'm thinking, well, it could keep going up. Maybe I should just keep the runner in. And it is going to keep going up. You see, like you could actually go crazy doing this if you try to be a perfectionist. Because there really is the only thing that I can be a perfectionist about, and this is a challenge every day, is how I respond to the imperfections of market realities. So,
Awesome. Yeah, thank you.
yeah. All right. Well, thanks, Tim. And thanks for coming out. Keep on keeping on. And if I were you, I would get some sleep if I haven't already.
Right on. Thank you. Have a great one.
You, man. Take care.